Tesla closed up today over 4.5%, and more importantly, something big happened on the weekly time frame. We've been waiting to see if there's confirmation of bullish accumulation on the weekly chart. The last time that this happened was back on the 22nd of April, and we saw that Tesla pushed up about 58% from that time when the trend shifted. Now, in this case, we've been waiting for higher lows on the BX trender to signify the bottom. In most cases, when we pull back into the market bias, which is this green indicator, and then we get confirmation of a higher low on the BX trender, that is an indication that price is going to break out into higher highs. In this case, the target of $280 to $300 that we've been talking about on Tesla for the past couple of months. You can see that this has happened before on Nvidia. When price pulled back into this market bias, we got confirmation of higher low. We saw price break out 47% within 42 days. It's happening once again here on Nvidia, and we might get another push of about 30 to 40% within 30 to 40 days. With Tesla closing today with a higher low on the BX trender, it doesn't mean that we can't pull back to 200 maybe one more time. But what it does mean is that this bottom that occurred back here at 190 is most likely it. We could see a potential rejection, and as we get into the smaller time frames, we'll talk about that. But I think that we're going to hold here when we look at the next 3 to 6 months. If we pull out to the monthly chart, we're about to break this monthly long-term trend resistance. You're going to also notice now that this will be 3 months in a row of bullish accumulation. We know this because we first closed with lower highs on the BX trender, then higher highs on the BX trender. And this month, if we close next week like we are now or even higher, we'll have once again confirmed higher highs. The last time we saw this type of pressure was back here when we had our major rally. And after this consolidation, we know if you're one of our students, you take our free courses, we go over all of this in them. I recommend the market bias course because that's the one with all the indicators. But we know that when we have an impulse followed by a massive consolidation, the next mode that's usually going to happen is another impulse. And this impulse could be as long as we saw before, back when we saw a fundamental shift in the company between 2020 and 2022. The same thing could happen here with AI, robotaxi, FSD, etc. And you guys know my viewpoint on that, and I will have an updated bullish long-term thesis on Tesla as we head into the next couple of months because a lot of people are asking about it. But if we look at the accumulation here on the bigger time frames, we know that once this level is taken out and we're able to hold over it, the next spot from here is 300, which is what we've been talking about for the past couple of months, and then 420 to 440. So I'm expecting a very, very big move in the next couple of years on Tesla as long as this level holds. So as we go from the monthly, we now move down into the weekly. We see that there's the bottom. We see the higher low on the BX trender. We see price bounce off of this support level on this market bias, much like what happened here. This is what I'm expecting. Same type of deal. Pull back into market bias, confirmation of bottom, about 60% run. In this case, I'm expecting about 270s 24%, 300s 35%. That would do some solid work for my Tesla calls. So I'm still holding my Tesla calls. Today was a great day. I took 2 days off of trading this week. I know a lot of you guys were asking where I was, but I decided that this week was going to be pretty slow. I wanted to get away. I haven't taken full days off of trading, I think in like 5 years, which is crazy. And I figured it'd just be a good time to walk away because I knew on Friday, which is today, we were going to get the remarks from Jay Powell at Jackson Hole, and that would have a little bit more, market volume behind it. So I took those 2 days off. Today was a phenomenal day. And so I still have the same position on Tesla that we talked about on Tuesday's video, but I did average down on my calls. I went in first with 50, then I added 10 more and then 10 more back on the 22nd, which was yesterday, after we saw that massive pullback on Tesla. Now, the reason that I did this is because we know that when price breaks above market bias on any time frame, which is this tape-like indicator, that if we get over it, there's normally a consolidation period. And then as long as this trend holds, we'll start to break out. So we know that as price is pulling back here, this is an optimal time to go long, setting stop loss on a lower low, take profit at this high, which would be 2.43, and then the gap, which is really what we want, up to 248. That's about a 4-to-1 risk versus reward. And so now with the weekly time frame closing with higher lows on the BX trender, confirming bullish accumulation, which we teach all of this in our free courses. That is a great sign. The next thing is that the daily chart bounced off of market bias, very good sign, and now closed with higher highs on the BX trender. So even though we had that pullback, shows that big money bought it right back up. And now I think that we're most likely going to see Tesla continue to run in the next couple of weeks. Let me know what you guys think down in the comments. If you want to take all of our courses, like I said, they're completely free. The link is in the description. And if you want to trade with me, get access to all of my real-time trade alerts and learn the two-step strategy with myself each and every single day to help you along the way. It requires only 30 minutes a day from 3:30 to 4 p.m. and then 1 hour on Sundays where we build the watch list together, which is also recorded if you can't make it. Go ahead and check it out, guys. Thank you for all the support, and I'll see you next time.